When we are evaluating about the derecognition of financial assets, we need to evaluate up to what extent the derecognition principle should be applied to financial assets or group of similar financial assets. While evaluating, we need to check about the derecognition will be applied on part of financial assets or it has to be applied entirely on the financial assets or group of similar financial assets. To identify regarding the partially application of derecognition principle or fully application of derecognition principle, we need to check some conditions. So partial derecognition will be applied if the test met any one of the below three criterias. For example, if the part comprises specifically identified cash flow from the financial assets or group of similar financial assets. For example, when an entity enters into an interest rate strip where the counterparty obtains the right to interest cash flow but not for the principal. So in this case, the derecognition principle will be applied on the interest portion of cash flow only, not on the principal. Second condition is if the part comprises pro rata share of cash flow. For example, the counterparty obtains the right to 90% of all cash flow from the financial assets or group of similar financial assets. In that case, the partial derecognition will be applicable on the 90% of the cash flow. Third condition is if part comprises pro rata specifically identified cash flow. For example, when an entity enters into an arrangement whereby the counterparty obtains the right to a 90% share of cash flow of a debt instrument, in that case, derecognition rule are applied to the 90% of those cash flow. So, when we are checking out the derecognition criteria and any of the three conditions are satisfied, in that case, derecognition will be applicable on the partial financial assets or group of partial financial assets. In all other cases, it has to be entire derecognition of financial assets or group of financial assets.